Well, there was a little bit of weakness this past week, and I think that has many people wondering if there is a stock market crash ahead, or is the weakness just a buying opportunity? Well, I'm going to go through the charts. We'll look not only at the overall market, but Bitcoin, gold, oil, whatever we can look at, the Canadian market, the US market. We'll go through all those. Plus, I will show you a day trade on XTNT, and we'll do a market scan and consider what to look for with day trades, all coming up. All right, so we had some big losses in the past week, lots of volatility, and I think that has many people wondering if there is a crash coming. Well, as always, the charts will give us the answer, and there are certain techniques that you can use using trend lines and support and resistance and figure out what is the likelihood that there is a crash coming. Now, this past week, we had some pretty good selling pressure, but each time the market came back to the trend line on the daily chart, it managed to bounce. Now, it's right at it, and I'm going to show you this on a chart in just a moment. Prices are right at the trend line on things like the S&P 500. So it could easily break down next week. However, the pullback that we are in right now is after the market hit a new high. It is not after the formation of a falling top. And so that is a little bit helpful. But let's take a look at the charts and I'll show you what to watch for. So I've drawn here on screen in green the upward trend line. And you can see that we touched off of it right at the end of the week with those big down days. And there was some increased volume as well. You can see the volume jump there. Also notice that the pace of the rising tops is shallower than the pace of the rising bottoms. And that's an indication that buyer enthusiasm is starting to dissipate a little bit. However, until we break down through this trend line, I'm not too worried. That could happen on Monday. We could get a break of the upward trend line. And then the next area of support is this 370 level on the SPY, the horizontal support. If we start to break down through that, then we should be concerned. But for now, we should do what the other pullbacks have caused us to do, and that is watch for a break of the pullback, like here or like here, because out of those, you get great opportunity. We saw at the start of February a really great run in the market, lots of good action, particularly in the small cap stocks on the break of the pullback. So if next week we can instead manage to break the pullback and start to move up toward that 400 mark on the SPY, well, then that's going to be a great opportunity for the buyers. Either way, you want to look for a break in one direction or the other to tell you what to do. All right, so let's look at lots of charts now. Here's the S&P on a shorter term time frame. That last chart was the daily chart. This is now the intraday chart. And you can see that at the end of the day on Friday, we did have some weakness. We broke the little attempt at a recovery right here as concerns about rising interest rates took hold of the market. And so we end on a closing basis through some support. We are still above that trend line of support, which is a support about 380 on the longer term chart. So we're right at that critical point. We'll see Monday if the market can maybe bounce back and then start to move back up. What it will then need to do is break this downward little trend line. So that's a pennant pattern. If it can break up through that, then the buyers remain in control, but really critical to watch it next week because lots of things could happen. Now here's the long-term 3-year weekly chart, and you can see that we are still holding the upward trend, so that's okay, but it is close, so watch it closely. On the NASDAQ, we had weakness here as well, but notice that the weakness comes off of the highs, not off of a falling top. I am more concerned about breakdowns from falling tops. Now this sort of shorter term upward trend line has been broken, but if you look at the longer term chart, we're still okay there. And we're coming into some pretty good horizontal support. So we'll give the market another week before we start to cry out that the sky is in fact falling. Russell 2000, those small cap stocks that have been the source of some great gains, and again, right at the trend line. We'll see if it can hold next week. Onto the Canadian market. And there in the short term, you can see very similar to the S&P. the attempt at a rally, and then the sellers took over, sent it lower. Not really much horizontal support till, I suppose there's a little bit here from this old trading range, and we're close to that, but then the next stop is down here. But when we look at the 3-year weekly chart, you can see that the upward trend is still in place, and so we shouldn't get too concerned just yet, but it could change in a week. On the TSX Venture, that trend, of course, went parabolic. Parabolic trends are a sign of emotion, irrational behavior. And when that happens, you usually get a pullback to the linear trend line. And we're pretty much there now, so this market should bounce, but then it may just go sideways for a little while as those speculative micro-cap stocks in Canada cool off a little bit. On to currencies, and I wanted to show the US dollar because it started to show a little bit of life this week. It still hasn't broken its downward trend, but it's starting to pick up some rising bottoms in the short term. So we could see the US dollar start to pick up and move higher. I would say this is still a bearish chart, but it's a little bit less bearish this week over last. How about Bitcoin? Well, it went parabolic. That means that investors were emotional, a little irrational. There is our resistance. We broke through that early in November. The trend went up parabolic. It retraced parabolic, and now retracing again. The linear trend line is where support is. So it could fall a little bit lower until it finds support at that linear trend line. And if it breaks that linear trend line, particularly after a falling top is formed, then there's trouble. But for now, momentum is still up. It is still in an upward trend. It is just quite risky. You'll remember last week I said it's very risky and likely to pull back. Well, we got the pullback this week. I think we could get a little bit more of a pullback before it finds some support. And on to interest rates, one of the reasons the market sold off is expectations that interest rates are going to start to rise, and that shows up in this chart. This is the 20-year Treasury bond ETF, and the upward trend is like that. Now, if this is going up, that means interest rates are going down. So interest rates were at their lowest here. Well, the cycle, the upward trend line broke a few weeks ago, and interest rates have been starting to rise. Even though the US Fed hasn't risen rates much, the bond market has been pricing in higher rates. And we sort of went parabolic to the downside. And that's what caused the crash last week, is concerns that interest rates were going to rise. However, the bond market clawed its way back, made some gains late in the week. And so we actually made a little bit of a comeback off of the lows. I think because the trend went parabolic to the downside, we may see the bond market rally a little bit in the short term, which means interest rates fall a little bit in the short term, like the real rates that you get in the bond market. However, the cycle is in of falling tops. And so my concern is there a little bit longer term that interest rates may in fact rise. And if you need to lock in a mortgage, now might be the time to do so. And on to commodities. Gold broke down this week as the US dollar started to show some strength. That certainly doesn't help gold, and it broke down from a descending triangle. The upward trend line sort of, it depends how you draw it. You can draw it like that, or you can cut it across this low. Either way, we either just through the trend line or right at the trend line. Because gold broke this horizontal support, I do have some concerns that gold is more likely to go lower than higher. But that is not the case for oil. It has been rising nicely since it made its breakout back in mid-November. There was a little bit of weakness this week, but still the upward trend is intact on the weekly chart. So we'll remain in the bullish camp, although I do think there is some potential for a pullback in oil. And finally, the fear chart. There was a little bit of a pickup in fear with that big drop on Thursday in the market, but it's still in the downward trend, the VXX in a downward trend. You can see we get these little blips of fear, but thus far, none of those blips have materialized into a big move higher. So we'll hopefully see that that trend continues. All right, so my ratings then, I'm long-term bullish on both US and Canadian stocks, but neutral short-term. Gold, neutral long-term, and bearish short-term. And I will turn bearish long-term soon if that upward trend line gets broken on gold. And oil, bullish on both time frames. So we had increased volatility last week, and that really indicates that investors are uncertain about the lofty prices for stocks. However, the upward trend is still intact, and as long as it is not broken, these pullbacks are buying opportunities. We want to watch the market very closely next week because that upward trend line could get broken. Now, gold is breaking down through some support. That's a negative. Oil is losing its energy, but still hasn't broken the upward trend line. Fear is low, but it did rise a little bit last week. All right, well, let's move on to the day trade of the week. And this week, I'm going to show you something a little different. Now, we'll still do the economics of the normal day trading and entry point, which is based on the action candle. But I want to show you how else you can trade stocks like this, one that I'm going to show you, if you miss them. All right, so this is XTNT. It was the hottest stock of the day. This is a 1 minute chart. So the lines that you see here are not reflective of what this is because I based the economics off of the 2 minute entry, which was triggered in our Active Live service. And of course, Active Live is where we monitor the entire US stock market for stocks behaving abnormally. And when they make these action candles, they often do big moves. Well, XTNT made the action candle early in the day on Friday. But let's assume that we missed this. Let's assume that we didn't get to take advantage of those very good economics. Was there a second chance? Well, one of the strategies I teach is something called a wave strategy. Now, we do the wave strategy on a very short list of stocks each day. And to know what that list is, you pretty much have to be an Active Live and have completed the Active Trader course at Stockscores. But the entry on the wave strategy was right here. It's breaking a downward trend line from a rising bottom on this 1 minute chart. It's a very abnormal stock. You can see the volume was very abnormal. And so if you miss the entry at the start of the day, well, that's your chance to get in later at a pretty good risk-reward trade-off. And then the stock, of course, did a big run. Now, it happened again here. You have a pullback and the break of the pullback from a rising bottom, and it had another little pop. So for the very active, nimble trader, the wave strategy is a good one. It's only done on a very small list of stocks. They have to be very abnormal, very liquid, and we have algorithms on Active Live that look for those. So if you are an active trader member of Stockscores, you'll see that. And if you have an interest in trading these different strategies, then take a look at the Active Trader course on Stockscores.com. All right, let's do our market scan. And this week, because the overall market was fairly weak, I'm not going to probably find too many longer term picks like I normally would. And so what I thought I would do is show you a market scan that members of Stockscores can do to look at the stocks that were worth day trading each day. And so for that, we're going to jump over to the market scan tool. And this week, instead of selecting the abnormal break scan, which is what we often do, we're going to run the day trader scan. Now, this is a scan that you can run about half an hour after the market opens, and it's going to find all of the stocks that are trading with statistically significant, very abnormal volume and good liquidity. And you can see it here in this chart. This is a 2-day, 2-minute chart, which I like to day trade off of. And notice that the volume is a lot higher. In other words, this stock is in play. Once you have your list of stocks that are abnormal, liquid, you can start to apply some basic chart analysis techniques and look for those breaks from good patterns. So here, JE, Just Energy, ran up, pullback. We have a strategy called a pullback play, which looks for a break of the pullback, a little pop. And then here you have a descending triangle. That's a pretty good sell signal right there on the breakdown from the descending triangle, a short sell signal, that is, if you wanted to do that. So we can, more as practice, we can just go through charts this way, looking at those stocks that are making the very abnormal volume, statistically significant abnormality, and that sort of thing. And with the market scan tool, you can run this even on the weekends just to practice and see which stocks had the best potential. And what I like to look for as I go through these charts are the charts that have good patterns. I want to see that abnormal volume, and if there is abnormal volume, then I want to see the good pattern. So there was a good short sell set up here on this little pennant pattern. Trend into the pennant is down, then you have the pennant pattern, and then you have the breakdown from the pennant. That's a good sign that that stock is going to go lower. Just applying basic technical analysis concepts, stuff that I teach in all of the courses I do, and looking for those pattern breaks. But the key is to do it on these abnormal stocks, and the market scan can help you find them so that you're not trying to look at 100 or 500 different stocks. You're focused in on those that are really abnormal, trading very strong volume, And then just look for the patterns. What we like to look for are flags. So here's a run up. This is called a flag pattern, break of a flag. Here's a little pennant. Trend into the pennant is up. Breakout from the pennant is up. If this stock had been able to break out of this ascending triangle, then it would have gone higher. It never did it before the end of the day. But that's it. That's what we look for. And a little bit on some alternative ways to day trade. I always talk about the Stockscores day trader strategy, which is based on the 2-minute chart and action candles. But there are other things that we can do with these abnormal stocks. It's called the superhero strategy, where we're trading different patterns and that sort of thing. All right, so hope you've enjoyed that. If so, please click on the like button, leave a comment. Most importantly, next week, trade well.